Hello. In this video we're going to discuss Schedule K1, which is replicated on page 1013 and 1014 in your book. Okay, on the Schedule K1 is used to report the partner's share of any income or losses that the partnership had during the year. Okay, the Schedule K1 and the partnership return are both due by March 15th. Okay, it used to be April 15th, but people were starting to complain about the fact that the partnership return and the individual return were both due on the same day, and it didn't make a lot of sense. All right, so they moved the partnership return back to March 15th as the due date. Now you can file an extension with Form 7004 if you want to. Okay, that'll make sure that there are no penalties. All right, if you are going to do this for a living and you are going to do partnership returns, make sure that if you cannot get the partnership return done by March 15th, that you do an extension. All right, the penalty, the last time I looked, the penalty for the late filing of a partnership return is approximately $180 per month per partner. Okay, all right, and that would probably break most businesses, especially if there were a lot of partners. Okay, so make sure that you do file your extensions on time. Okay, if you're using tax software, they can be filed electronically very, very easily. All right, every year I always make sure that I file my partnership and my corporate extensions on March 1st, even though the partnership extension isn't due till March 15th and the corporate extension isn't due until April 15th. But I file them on March 1st anyways, just to make sure. Okay, and I always file my individual extensions on or before April 1st. All right, that way I know that I have covered myself and I have taken care of my clients. Okay, so Schedule K1, let's take a look at it. All right, on Schedule K1, we're going to look at Part 1, Line A. All right, that is the partnership's employer identification number that we had on page 1 of Form 1065. Then you have their name and their address. All right, then in C you would put the IRS Service Center where the partnership filed the return. Okay, if you don't know that, you just go to irs.gov and you can look it up. All right, box D, if it's a publicly traded partnership, that means the partnership is traded on an exchange. Okay, you would X that box. All right, then you have the information about the partner. So line E, if it's an individual, is going to be a social security number. If the partnership has other partnerships or corporations as partners, that would be their EIN. The partner's name and address would go on line F. Okay, line G, you determine whether or not the partner is a general partner or an LLC member or a limited partner or LLC member. You have to check one of those two boxes. All right, in line H, you determine whether the partner, if they live in the United States, they are a domestic partner. If they live outside the United States, they would be a foreign partner. All right, line I. Okay, 1, what type of entity is this partner? All right, is it an individual? Is it a partnership? Is it a corporation? Okay, line I2 you probably don't have to worry about. Line J, all right, line J should automatically be filled out every time you do a tax return, but you may not know what the beginning profit and loss and capital percents are. Now, the profit and loss percents are going to be determined generally by the partnership agreement. It'll say in the partnership agreement that, if it's there's two of them, it's 50-50, but not necessarily. All right, if there is no partnership agreement, then you just do simple math. If you have 2 partners, it's 50-50. If you have, 3 partners, it's 1/3 each. If it's 4 partners, 25% each, and so on. All right, only that's the default unless there's a partnership agreement that says otherwise. Okay, the capital percent and the profit and loss percents could be different. Okay, that could be different. All right, remember, profit and loss a lot of times, obviously are determined after the partnership is formed. The capital percent would be determined immediately when the partnership is formed. So the capital percent could be different than the profit and loss percent. All right, line K, the partner share of the liabilities at the end of the year. All right, you have recourse debt, non-recourse debt. All right, recourse debt is when, there's some kind of a lien or there's some kind of a collateral on the loan. Non-recourse is basically, it's a handshake. All right, it's a debt based on a signature of good faith. Okay, and you would have to determine that by talking to your clients about their long-term liabilities. Okay, all right, the partner's capital, all right, is determined on line L. All right, so you start with their beginning capital account. All right, if they contributed any capital during the year, all right, that's going to go right there in the second line in line L. All right, where it says current year increase or decrease, that would be their percentage of the ordinary income of the partnership. Any withdrawals and distributions they took out, I mean, if they cut themselves a check, all right, that wasn't a guaranteed payment, that would go in that. And then, so in other words, you would take the first line plus the second line plus the third, or maybe minus the third, minus the fourth line, and that would give you the fifth line. Again, the software should automatically figure this out for you. All right, the basis, that could be either the tax basis, in other words, the partnership basis is based on the items on the tax return, or if it says GAAP, all right, that means that the basis is based on the financials. All right, in other words, the books of the company. All right, don't worry about line M too much. That's probably you're not gonna see that too often. Okay, then we go to part 3. All right, part 3 is the part that is going to pass through to the different lines on Form 1040. All right, so you've got to know where these lines are. All right, okay, generally partnership income passes through to page 2 of Schedule E. All right, Schedule E. So if the business was not a rental-based business, all right, they would have ordinary business income or ordinary business loss. All right, and that would pass through to page 2 of Schedule E and would be combined with any personal rental properties that would be on page 1 of Schedule E, and then those combined amounts would pass through to line 17 of Form 1040. All right, if the business had any rental activity, that would be reported on line 2 of part 3. All right, so that is Form 8825. Okay, that is not replicated in this book. You'd have to go check out your software, check out the instructions for Form 8825. But any income from that form passes through to line 2 of part 3 of Schedule K1. Okay, any guaranteed payments to partners, all right, which will be in the next video, all right, is reported on line 4. All right, and that will pass through to that particular partner's Schedule K1. All right, okay, it should not pass through to the other partner who did not get the guaranteed payment. Line 5 is interest income. That'll be split evenly among all the partners. All right, line 6A and 6B, all right, ordinary dividends, qualifying dividends. All right, so line 5, line 6A, and line 6B get reported where? Tick, 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 tick. Answer, Schedule B of Form 1040. Okay, line royalties you're not going to see too often. All right, those are amounts that are paid to artists, songwriters, musicians, things like that. All right, line 8, line 9A. All right, These are your capital gains and losses. All right, ask yourself again, where does that get reported? Tick, 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 tick. Answer, Schedule D. All right. All right, let's drop down to line 10 of Part 3 of Schedule K1 on page 1013. All right, we have Section 1231 gain. If you remember back to Chapter 7, the sale of real estate qualifies as Section 1231 property, all right, and can receive favorable long-term capital gain treatment. If that's true, that will get reported on line 10, all right, if there are any gains and losses, all right, okay, and those would pass through also to probably Form 4797 and eventually through the Schedule D. All right, line 12, Section 179 deduction. All right, where does that get reported? Okay, tick, 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 tick. That gets reported on Form 4562, our depreciation form. Okay, all right, line 13, other deductions. Okay, that would be deductions, for example, for charity. If the partnership made any charitable contributions, all right, those would pass through to the partners in relation to their basis in the partnership. In other words, in what percent of is their interest. Okay, line 14 gets reported on Schedule SE. All right, partners are not incorporated. Okay, so basically a partner is treated the same as a sole proprietor. They don't file a Schedule C like the sole proprietor does, but they still will file Schedule SE and report their ordinary income, all right, from the partnership, all right, as self-employment earnings. Now, here's one thing to note. If the partner had income on line 2 of Schedule K1, all right, that is not self-employment earnings. Rental income is passive income. It's not ordinary income. All right, so if the partner, all they had was rental income, there would be nothing on line 1, nor would there be anything on line 14 of Schedule K1. That's probably one of the bad things about being a partner in a partnership and your only income is from renting real estate, because you never get a chance to put into your Social Security fund. All right, I've had people that are like, well, what do I do? I mean, this is what I do for a living. And I tell them, well, you know, you could, you know, if, you know, you might want to just go out and get a regular job, you know, or, you know, put all the assets in your spouse's name, all right, and they could always hire you, all right, and pay you a paycheck because you're not a partner anymore, all right. You know, you might have to stop the partnership and go back to a sole proprietorship. But the bottom line is that partners, again, cannot receive a W-2, nor can they pay into the Social Security fund if all of their income is passive income. All right. The lines, all right, that need a description are found on page 1014. All right. So, for example, if you go to, let's go back to line 13 of Schedule K1, all right, where it says other deductions. So turn the page, okay, and look at page 1014, go to line 13, and it says other deductions. Okay, so if you had a charitable contribution and that charity contribution was to a 50% eligible institution, all right, okay, you'd have to go back to Chapter 6 and see what that means. Then what you would do on line 13 of Schedule K1 is, you see that little box underneath the word or the number 13, you would put a letter A, and then the number would go in the field right next to it. Okay, so a lot of the boxes on Schedule K1 need to have a letter, and a number put in them, and you can look at page 1014 for those answers. Okay, that completes our discussion of Schedule K1.